Hi YouTube, hey, this is Christian Brindle here, Medicare health plan expert and specialist located about 20 minutes outside of Salt Lake City, Utah. And today we're going to be doing another Medicare supplement deep dive for the state of Oregon this time around. If you haven't seen any of our other states that we've done this for previously in the last few weeks, I encourage you to go check those out. We've done them for Texas, Florida, Idaho, Utah, of course, because that's our home state, Colorado, California. And we just have really enjoyed doing them, and we had some real positive feedback about it. So we wanted to come through and do another one for the state of Oregon today. Now, if you've seen any of these previous videos that I've discussed, you might know the nature of kind of what we're looking at here. We're basically going to be looking at one particular area. So I pulled a zip code for Portland, Oregon, just to kind of give us an idea. And just to keep in mind, some states are so large, or they might have different prices depending on what side of the state that you're looking at the plans on. So make sure to keep that in mind. If you're on the other side of Oregon maybe than Portland, then it might not be the exact same prices as what we talk about today. And also, if you watch this video maybe a year down the road, the prices may have changed at that point. These prices don't always stay exactly the same, but at the time of making this video, which is actually August of 2020, you can expect that these prices should be relatively current. So without further ado, let's get right into it. For those of you who don't know, Medicare supplement plans are designed to come through and pay after Medicare. So Medicare pays 80% of your medical bills, Medicare Parts A and B. A supplement plan is provided through a private insurance company, and it's going to come through and pay a different percentage of that 20% that Medicare leaves behind depending on the plan. The Plan G is a very popular plan, as is the Plan N. Plan G will pay everything that Medicare leaves behind with the exception of a one-time-a-year deductible of $198 one time a year. Whereas a Plan N is a little bit cheaper in premium. It also charges that deductible, but it also charges an up to $20 doctor copay per visit, a $50 emergency room visit per visit, and it also doesn't cover what's known as the Medicare Part B excess charges, which is basically where if the doctor wants to charge anything additional on top of your bill, they're able to do so. But typically you don't see that happen. It's very few and far between. But I'm a big proponent of the Plan G because with the Plan N, it might save you some premium. You might have a little bit lower rate increases for various reasons going forward. But with a Plan N, if you get sick and you're seeing doctors regularly, those up to $20 doctor copays each visit can add up quick, fast, and in a hurry. I have plenty of clients that see a doctor every week. And so I think the G just gives you more predictability going forward with that. Although they're both very popular plans, and we'll look at both of them. The Plan G, we're going to start out looking at that first. And we're going to run it off a scenario for a turning 65 female. So let's take a look at it. We're going to be seeing all of the different insurance companies that offer Medicare supplement programs in that particular market. So it looks like the cheapest one we can get at this very moment is actually with AARP Medicare supplement plans insured through United Healthcare. So we're going to also look at what's known as market analytics to kind of see the rate increase history in this particular market. So for United, they've had this plan in the market for the last 3 years, it looks like. They've had plans in the market for 22 years, but this particular product line started in, looks like, about 3 years ago. They had a 7.5% rate increase in 2018. A 5% rate increase in 2019, but then they went down 13.5% this year, which makes their average about negative 0.3%, so that's great stability over a long period of time. We always love to see that. And United, of course, is a huge company. They have 26% of the market share, which means 26% of people that have Medicare supplements as of 2019 in the state of Oregon have it with United Healthcare. So that typically is an indicator of how they're going to be able to spread risk around over the long period of time. Typically, the bigger the company, this isn't the case all the time, but typically the bigger the company, the easier they're going to be able to spread risk around, and that can impact your rate increases. It does have something to do with that. If we keep going, we have a Thrivent plan that also looks like it has not too bad rate stability, but they don't have as many people, as much market share as I like to see, and that makes me a little bit nervous. Then you have a Lumico company, same problem, market share kind of thing. It looks like they've only been in the market 2 years, so there's not a whole lot of rate history to go off of. Usually you can get an idea of how a company's rate increases are going to be over, if they have a long history, and you can kind of get an idea of roughly what they might be going forward. You see Cigna here, so it looks like they've been up and down depending on the year, but they have a lot of history here. They've gone up 4.1%, which isn't bad by any means. And this is Loyal American, which is a Cigna company. They're a little bit bigger market share. United American, which has been around a long time, they only have a 1.2% rate increase history, which we like to see that. But the same thing, market share might not be where we'd love it to see it. National Health, which is a National General company, that's a little bit of a higher rate increase than I typically like to see. Everest, they don't have a history as of yet, it looks like. Omaha Insurance Company, which is a Mutual of Omaha company, they look like they were doing really good since 2015, and then this last year it looks like their most recent rate increase, they went up 15%, so that's something to keep an eye on. Transamerica, 8% is a little bit higher than I typically will like to see. Regions Blue Cross Blue Shield of Oregon has a negative rate increase average, which is great, which means they've lowered the price over the long haul. The Manhattan Life Insurance Company, they've had about an 8.5% rate increase, it looks like, which is a little bit higher than I like to see. So you got to get the picture, I think. Now let's look at this if we were looking for a male, just for fun. Because typically males have higher prices than females by most insurance companies, because insurance companies usually take the stance that females are going to be healthier than males at the age of Medicare, which they're probably right about that. Thrivent, let's see. So we talked about them. Here's United Healthcare, second high is lowest, and then the prices, as you can see, look like they're a little bit higher for some of these companies. So you kind of get the picture there. Now let's say we were going to look at a Plan N for a male. A Plan N is probably going to be a lower price, coming right in, but they have those extra copays than the Plan G does not come with. So just to keep that in mind. Looks like the cheapest Plan N you can get right now is through Everest. Not much market share though. That's the thing that concerns me. Then you have AARP, but they're quite a bit higher than Everest starting out, but they probably have more of a long-term rate stability here. So they have since 2013 to now, they only averaged about 3.7% rate increase, which that's strong. That's very strong. Mutual of Omaha, they have decent market share, it looks like, in the state, and they only have 3%, which we like to see that. That's not too bad. Humana, 5.5%, which is decent. Lumico, just not much market share, not much history. National General, same thing. Regents, doesn't look too bad. Humana, again, another Humana plan, a little bit higher. Cigna, 5.1 isn't bad, but I think you can probably maybe find a better rate increase history. Manhattan, 9.5, you can definitely find a better rate increase history. So you kind of get the picture here. Folks, if you'd like to work with us and you live in the state of Oregon, or if you live in one of the other 10 states that we work with people in, and you're just watching this because you might know somebody in Oregon, or maybe you just enjoy hearing about these different markets and kind of what they cost, I'm going to put our number over on the screen here for you to give us a call. We work with people in the states of Utah, Idaho, Oregon, Colorado, Idaho, Washington, California, Texas, Virginia, South Carolina, and Florida. Again, give us a call. We'd love the opportunity to be able to talk with you. And if you enjoyed this video and if you found it helpful, please do us a favor. Drop a like on the video so it helps us reach more people just like you. And comment on what you'd like to see me talk about on future videos, and subscribe for future Medicare and insurance-based content. Have a great day.